What's up, everyone? Welcome back to another C-Space trading video. Welcome to all my new subscribers, and thanks again for the ones that's been around as long as you have. I'm truly grateful for the people who do stick around and watch these videos. It is what inspires me to continue to put them out. And comment. If you have questions, please comment. I don't mind. I constantly check my inbox for any messages. I don't mind answering them at any time of day. I want to help you succeed. And if you see something that I miss, we're all in this together. We're all trying to make money. I'm not a perfect trader. I'm constantly trying to become a perfect trader and love to get there, but I'm always going to put in the work and try to get better. So if you see a setup or something that I'm missing, or if I'm wrong on, let me know. Let's go through this together. Let's make money together. All right, but this is more of a how-to video, a little tutorial on what I look for during the day. I'm looking at a 1-minute chart now in the SPY, the SPY, which follows the S&P 500. So first off, if I'm going to trade that day, let's back out into the daily chart here and wonder why you're going to day trade and look at the daily chart. I like to know what my chances are of this market or this day going to be green or this day going to be red. So as you see here, here is the current cycle of the SPY. Here's the all-time high of around 286 or almost 287. So you have an all-time high here. Knowing that, you're going to have a resistance level here. You know it's going to slow down and consolidate and pull back, or possibly even break out. If it breaks out, great, but you got to be very cautious when you get in this area. Also, we're in this channel, this uptrending channel, where it likes to kind of go up and get close to this line, and then it likes to go back down and at least get in this area, and it's been doing that for quite some time now. So when you're at the top of a channel, be cautious. There's a good possibility you're going to have a slight pullback. So if you're going to go in long or short, buying a call or a put, trading options, you got to keep this in mind, because if, say, you're here at the top of a channel and you get in near an all-time high of the day and think it's about to break out, and you go long and it turns the other way, you could just bought at the highest point. It's going to happen in the next day or two. So be cautious. As you see, we're getting here to the top of this channel. I'm starting to see some indecisive candles. You're seeing this consolidation. You're seeing the indecision in the market. The buyers or sellers not sure which way it's going to go. So, and the volume got extremely weak here too. So you know there's a very high opportunity coming that it's going to turn. It's going to pull back some. No one knows where it's going to pull back. It could go back down here and touch this line and go to the 200-day moving average. It can just touch this 9 moving average. It's 20. So who knows? But here, this is Friday, August the 10th. And we did have this gap down, and it's an indecisive candle as well. So this tells me there's a good possibility this could kind of sit around here one more day and then start trending back up, which that'll be great, but it's still too early to tell. We'll have to see what happens come Monday. But let's go in and look at this day here and see how the day turned out and what we could have done to get in and get out and make some money trading options. So let me pull in here, make sure on the right day. So yeah, here we are. So it gapped down here and opened up, and then it started kind of running up. It got close to that very important exponential 9 moving average that I like to use. Is it follows that and touches that, bounces off that all the time. So if you ever day trade in SPY, I highly recommend using that exponential moving average of 9. So let's see, it comes up and touches and goes back down to the VWAP. VWAP is also very important. Usually when it gets too far from that VWAP, this thing will come back down to it. You've seen it started getting away from it, separation. It went back down, touched it. Then you have this, not quite a hammer, it's very close. It may possibly be a hammer. I'm not going to measure. It's all about measure, but yeah, very close, very similar. A lot of traders see it and think, all right, that's the hammer, that's my turnaround point. And you have another run up here. So this could be a potential play if you could have got in here early. Here is the 283 calls. We're sitting at 283.50. if you would have got here at this hammer and you would have got in early here, you could have got in this play. Well, excuse me, inputs. Let's find the calls here. Call 283 call. You could have got in at 81 cents, or maybe possibly even 83 cents. Let's say you got in at 84 cents. Here you could have got in early, and you only plan on being in this for a couple minutes. Notice when you don't know where the market's trending, you need to be in and out as quickly as possible. The longer you're in this, you're more vulnerable to a strong pullback, a strong breakout, and it can go into the opposite direction you're in, and you could lose everything you have in this. So if you would have got in at, when I say 88 cent, 89 cent here for a 283 call. 10 contracts would have cost you $890.89. So then it could have had this strong run. I would have been nervous here at this line, but I would have been just watching it carefully. It popped through. You've seen it pop through the high to make a newer high. Then you start seeing the candles get shorter, and you have a slight pullback, but it become a hammer. But also this could be a bearish move at top of a at an all-day high here, and then you had this indecisive candle, and then you had a strong pullback. This should be a good indication that this is the top, or it's going to sit here for a while. So this was telling me that we may be needing to make an exit. So you could have got out here when you've seen this fall, and that would have netted you 105. So if you got in at 89, you could have made 16 cents per contract. So if you got that $890 in 10 contracts, you could have made that into 100 and what I say again? 100. Say you got out at 105 or 105, so that'd have been $1,050. So you could have made over 140 bucks, 150 bucks plus your fees. So that would have been a good move, and you would have been in there in a short amount of time. So that would have been a really good scenario. However, say you missed that one, I wouldn't have shorted here because you really wasn't sure that it was going to make this big of a fall. It did come down, and then it stood on this 283, this mental area, 283, 283.50, or 284. A lot of people get in at these levels, or they short these levels. Everyone's also looking at this level. If it would have fell down, say, to 282.88, there's a good chance shorts would have came in, and this would have kept pushing down. However, it didn't. You had a strong push up. So a good long here would have been nice as well off that 283, but it's not. There's no strong candles telling me that it was going to make this much of a run. So I wouldn't have got in here. Some sure probably did and probably made a good bit of money, but I'm looking for something definite. So we're still out of this thing. It's just bouncing up and down. I would have probably been looking at this point and trying to find some type of telltale sign that it was going to give me to make a break in the right direction. Still not seeing anything. And let's start drawing some lines. So you had this low here, and it made lows here. And let's extend it out here. So we can kind of just see where this thing may be breaking and make a successful trade, because I like to watch these wedges and get out and get in and get out. So alright, so you have these lines drawn, and a lot of traders use this to see when it actually makes that break above. Here could have been a good point to get along, but you'd have missed that. A lot of traders probably got in here. You have a strong move through this line, and then as soon as it got to this high here, it pulled back and went right back into this, touched a VWAP, then didn't make its way up here. So if you would have got in here and you say your out was below the VWAP, you probably would have still hit that stop loss here. So that would have been possibly a loss. But if you would have waited and got in on this inverted candle, or not inverted hammer, this hammer here, I love hammers. Hammers are a very strong candlestick that tells you that it possibly could turn the other way. I like to set up strategies only using just this one candlestick. Look for this one candlestick in the 1 minute, in the 5 minute, the 15 minute, and then play it, that with the time. If you're using 1 minute, you're going to only be in this thing short amount of time. If I'd have got in here, I would have possibly got out here. If it had been a 15 minute candle, yeah, you're going to play it a little longer, but you're going to be up and down a lot longer. It could be a little stressful for you. So this also could be a good indicator after this breakout here. If you did not get in here and seen this, but you didn't get in here as well because you wasn't sure, it touched this line again. It came back down to this 9 minute moving average and then came through. This would have been a great entry to go long. You could have got in long here at a 283 call for 90. Well, excuse me. Let's go down and get it right. 93 cent. You could have got, let's just say 94 cent. And after this pop, I don't always do it, but I tell people to do it, and I try to do it myself. It's whenever you get in somewhere and all of a sudden it makes a huge pop, go ahead and take that money, especially if you're using the minute charts. If you're using the minute charts and this thing takes off, there's a good possibility short sellers are going to see this same pop and try to short it back down to this area. So when it took off, you could have got out here in 3 minutes. Going from say 94 cent, and the high was say a cent 7. So if you could have got out at 105, still 11 cents per contract. On 10 contracts, you would have had $940, and you would have sold it at $1,050. That's money. So look for these breakouts here. All right, so let's go on through the day. See any other potential. As you notice, we did have this breakout here, but this wedge here, then it kind of come back down to this wedge. It popped, it stopped here, went back up, then it fell. So if I was watching this, there's some weakness here. And that's when you start thinking, well, this thing could start, it could take back off and go back to these lows at 283. So you need to take keep a close eye on it, because it did come all the way back down, and now you're back down, and if this would have continued on, it was now below this. So this is a good time to just watch it. And if this was also continued on, you notice that it made a new, these lows that got below the line, and now it is not even, it's just kind of following that trend. It's not breaking up any higher. So this is a telltale sign that this thing is getting weak, and we're probably about to head south. And that's exactly what it did. There's no telltale signs in the minute charts that it's going to make this strong of a move south. But let's just say, let's move out to, if you don't like minute charts, you think it's too fast for you, like to slow things down, you're at work, which I'm at work a lot of times, so minute charts don't work out. Sometimes I got to check out the 5 minute, 15 minute chart to see where things are going. Let's see if there's anything telling me that the move was going to happen. So here is what you see in the minute charts. This was a good indicator here, as we made this initial pop and run up, it came down, then you had this level of support where it kept going down, which was basically this line, and coming back up, this level of support, come back up, this level of support, come back up, and then finally some buyers came in and thought, it can't keep doing this, it's got to go to at least back up to 84. So they went in long, they pushed it, but then the seller stepped right in and pushed it right back down within 5 minutes. So that was a big move there, how it went from 283.86 up to 284 in that 5 minute time frame here at lunchtime, and then it started falling off again. So here could have been hit the VWAP, and as soon as you seen it kind of broke below the VWAP, it come back up and touch. It's just why you've seen all these sellers come in here. This possibly would have been a great time to get in short. Let's just see if you go short there and put options. Let's go back to this 283. What's that? We had 280. That would have been 283.53. I probably would have been looking at the 283.50 put. Let me pull those up here. 283.50 put of the same day expiring. I only use the ones expiring the day of or day before because those are the ones that's going to make the biggest moves. Very risky. You don't want to be in long because they're going to expire at the end of the day. So be cautious when using those expiring options. So I would, when looking here at this indecisive candle on the VWAP after you have a lower low from here, so you get this downtrend. So as soon as you could have came in here, if you could have got in there, as soon as it broke 283.50, had been good time to go short. You would have been getting in around 40, let's just say 42 cent. It ran down, came up, touched that 9-minute moving average here, and then continued to fall. And remember, if you're in a 5-minute chart and you're trading off a 5-minute chart, you're going to be in it longer. So you could have got in this at 120. You're not going to get out 122 unless it just plummeted. You're probably going to have to run a correction, which this is what this was. It came back up. It hit roughly 50 to 60% of this downfall here between those two candles, and then hit the 9-minute moving average, and that's when it took the dip. These candles got short. This very short candle here, I would have possibly liked to get out here, especially once I would have seen any green, and it would have broke this here and made a new high going from 282.82 and up. And also one of the key minus, I would have probably honestly got out at 283. I like to get out at these marks because a lot of traders, that's usually when buyers step in. So, but once it broke from that, there's a strong indication it was actually going to go a lot further south. However, I would have been in green here at 71-74 cent after getting in. What did I say? At 43 cent, 42 cents. So in roughly 30 to 40 minutes, you could have made 30 cent per contract. 10 contracts. That's $300-400 bucks you could have made in 30 minutes. So that's a good move there. And if you could have had the balls enough to sit around and wait for it to kind of make another correction, touch this 9-minute, and it fall back down, you could have actually got in at this at $1.03. So you could have more than doubled, about 150% gain from 43 to 103. Good money to be made there playing the options by looking at this and just watching the market throughout the day, seeing that it's getting weak, knowing that the day before you had some indecisiveness and you had this gap down. So you knew, and you was at the top of a channel all day high. You knew it was getting weak. It's just a great time to go short here. But I'm just going to stop here for today. Hopefully you picked up something on why or what you could have used. Once again, if you like what you see, you want to continue to follow, please subscribe. Comment if you got any questions. If you see something on this chart that I missed that could have helped me make me a better trader, heck, let me know. Like I said, we're all in this together, learning together. Pay attention to these candles, learn these candles, put into work to understand what these candles are doing, because these candles tell you a story. If it's a 5-minute story, a 1-minute story, an hour story, that's what these candlesticks are doing for you. So use them to your advantage, and let's make money and profit together. You can look me up on Twitter. You can look me up on Instagram at C_SpatesTrade. Hit me up, ask me how it's going. Follow me around. No problem in that. I include what I'm doing throughout my life, as well as trying to put some charts out and some examples. So hit me up, follow me, subscribe, stick around, and more videos to come. Thank you for everything you guys have done for me, and y'all have a wonderful day. See ya.